Ladies and gentlemen of the crypto space, we're live on Thursday at 11:29 a.m., January 7th. It is a heck of a day. I don't even know where to begin, but we're going to begin because we need to dive in. We need to understand. We need to talk about topics that help us gain a sense of what's going on and why it's going on. And that's the only way we can make proper decisions. Markets tell a story. Investing is about understanding it. This is the way I like to think about the system. We're going to do a deep dive into this topic because basically this says it goes up until the story changes. And we're going to talk about the story today. We're going to talk about if things keep going up. We can talk about what I like to talk about to understand this system. Today's episode, along with all episodes, is sponsored by Exchange Angels, with a non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen, see what's going on. Captain Weber's in the house. Yes, Barry, DGB. Digibuy. We'll take a look at that chart today. Let's look at Bitcoin. What, 39,200? So this is a grind. Obviously, if you pull out to the monthly, it's a massive, massive straight vertical line. But if you're looking at a relatively short time frames, this is a grind up. What you have is a normal market function. You have buyers and sellers. You have more buyers than sellers. And we don't see any significant unloading of assets. If we did, we would see red wicks to the downside, which was very historic for Bitcoin and is still the case for lower market cap assets that have great liquidity and maximum volatility. But that is not is what's playing out here. And even the few dips or retracements to the downside have stuck by trend formation very significantly. And actually, this is quite meaningful. If you extend this trend line, we are literally still on trend. That's crazy. Um, that's a crazy trend line. That's good that I drew that. So that's the story. And this is, frankly, when you see a story change is when you have a trend deviation, you have a break to the downside, and things will continue. That's the most important thing, as I was alluding to in the introduction. Trends continue until they stop. So as of right now, this is on trend. Significant support to the downside, low time frame 200 EMAs, and the larger time frame 200 EMAs are significantly to the downside. So we can have meaningful corrections based on technicals, and that'd be a heck of a rip to the downside. 26,000 for the 4-hour 200 EMA, and dare we say the daily 200 EMA. That's going to be brutal. That brings us to, I don't think we're going to see a daily 200 EMA mean regression at this point. That'll take us to 16,124. But the hourly, but bear in mind that that's the thing about 200 EMAs. They provide significant support for the algo traders and also psychological support for just people trading. To get to those types of mean regressions, you have to break through psychologically the shorter time frame mean regressions, and these would be devastating. The people would be buying. It'd be like a frenzy if you see anything like that. And I don't think we're in. We can't. There's nothing for certain, but because we did have mean regressions here, no reason we can't have a rip and a dip to the downside. But that would be one heck of a that'd be one heck of a dip. Check this out. You think we're going to see a 20%, 17% dip to the downside? Well, there's mean regressionists that strongly adhere to the principles of the natural phenomenon. It's human nature. Things trend towards the mean, the average. And the longer they deviate, just further enhances the potential pain when a mean regression occurs. But you still have the psychological support of the shorter time frame mean regressions, or the longer larger size exponential moving averages. So you have to break through these psychological barriers first, because a huge quantity of persons are going to see this as a massive buying opportunity. 8.7% to the downside, about $4,000, 3 and change actually, 3,500. Yeah, so the trend continues until it stops and reverses. I don't see any indication that the trend is reversing. meaning the larger macro trend, at least short term, we can have the mean regressions. No reason it can't drop $5,000, and that would be, you know how bullish that is if it bounces off the 200 EMA and just starts the slow grind higher of higher highs and higher lows. That's a reset, a cleansing, and frankly, a transference from weak hands to strong hands, which just further solidifies the bull case. Um, mean regressions are powerful in that regard. Let's see who's in the stream. George is in the house. Howdy, howdy. Crypto Chick, always a pleasure. David Morgan, yes. Noah, what is your opinion in the best way to earn yield on DAI and Curve? Do you have a stream that explains this? I've discussed it historically. Um, DAI. So DAI is extremely useful. Um, so DAI comes from MakerDAO and the Oasis. Open the Oasis. So I've shown you guys, really, a signature? Looks like they're upgrades. Is that L2? That'd be fascinating. Oh, wrong site. Is it? That's not my account. What is that? Yeah, the Borrow app. So I've shown you guys this before where you take a collateral asset like Bitcoin. Frankly, there's a lot of collateral assets. So you go over here and you're able to collateralize a lot of assets at this point, highly valuable assets, including RenBTC, WBTC, stability fee of 4.5% on WBTC currently, and a stability fee of 6%. So that's the interest you have to pay. So the whole goal is to generate yield from this debt position. So I'm not a fan of fiat, as folks understand, as I've expressed. So if you're holding DAI just to hold DAI, um, I guess that's a personal choice. That's cool. But Curve is an incredible source of yield. Here's the problem: you're going to spend a fortune in depositing at this point. For me and the price of Ethereum considered, I can't do anything. It's $50 a transaction, $100 a transaction on 1inch exchange, and like $30 a transaction on Uniswap. It's going to be $75 just to deposit into 1inch, deposit into Curve. But the yield is incredible. You're getting 40% yield in the compound pool. 7.89% denominated in DAI, and you're going to get 32.68% denominated in CRV if you have a VECRV boost. So most people aren't, especially if you haven't touched Curve ever. But so you're going to get about 13% APY denominated in CRV. Now there's pools that have higher yield. Well, one that I like is USDN, because USDN is a Waves stable coin, and it's giving you 12.84% with an additional 31.33 to 78.32% yield denominated in Curve. So that boost is huge if you're a VE Curve holder. If you take Curve and lock it for VECRV, you're able to get the two the two yield. So this guy's paying 144% denominated in CRV. This is Ethereum, so this is literally an Ethereum pool paying you up to 37% yield. So, and this is the tip of the iceberg. Obviously, you have the Urine vaults and what Andre and Bantag are working on with Urine V2 and all that insanity. This is basically DeFi automation here, the easiest way to participate and generate yield from the DeFi space without getting too complicated with the various protocols and the complexity of the implementation, the configurations. There's more yearly growth, like 29%, 15, 14. Where's the DAI? 24%. So yeah, so there's your yield. And these just beats the pants off 0.01% in a bank account, but there are risks included, and that's the whole point. The whole point, and what emerged in 2020 is a yield curve, where you're able to actually generate yield because monetary velocity exists in the DeFi space, and monetary velocity has collapsed in the real world, which is lending and borrowing and debt positions. And that lending and borrowing generates interest payments, and those interest payments, because they're generating money with their borrowed money, and that is payable in 24.88% DAI. And that's the way this works, and that's the way Aave works. So Aave is a great source of yield. Let's see what you get on DAI at Aave. Aave is a lending protocol, so people borrow your DAI, they over collateralize their debt position. So there's basically, Aave might be the most little to no risk in the entire crypto space. So you're going to get 11% on your DAI. Take that, Chase and HSBC. And this is an over collateralized debt position. There is no risk whatsoever with regard to the debt position. The only risk that occurs with regard to Aave is a systemic fault in the actual smart contract algorithm, so on and so forth, an exploit. But um, keeping your money in a bank account, you're losing 8 to 12% a year. So you're taking a risk no matter what, and this is part of the risk analysis process. And what's the right thing to do? To me, if I'm losing 8 to 10% a year versus a risk minimized position that generates 11% a year, this is a no-brainer. This is a no-brainer. Clearly, you don't take all your assets and place it into one particular thing. Spread your risk around. Never go all in, never spread too thin. And that is the way this basically works. And that's why it's on fire. This is beyond on fire. This is basically what Raoul Pal's talking about is S-curve adoption. It's exponential. This is exponential at this point. I mean, this is going up since January. Wow. No way. Really? We're up $7 billion since January 1st. That's how much money is flowing into the DeFi space in the search for yield, as well as the asymmetric return of the assets that are capturing and creating these yield generating products and services. Massive. MakerDAO, the lending protocol that I showed you, those boys have $4.39 billion locked in it. Aave has $3 billion. Now, this is Aave V2. There's also an Aave V1, but they have $3 billion. Uniswap has $2.77 billion in liquidity. You go over here, go to the accounts FYI, pulls that FYI, and you're able to see what Uniswap V2 is doing for yield. Let's look at the volume. Sort by volume. So the problem here is you have impermanent loss risks, and that's what Bancor V2 is solving. And that's what these minus numbers are, because there's risk. Because if you have a pool with DAI and Ethereum, or if you have a pool with let's say Aave and Ethereum rips to the upside, Ethereum, if everyone's buying Ethereum, the pool is going to be short in Ethereum. There's going to be less Ethereum in the pool because people are buying it. But that means you're not capturing that price increase in Ethereum. Because the pool, you're going to have less Ethereum, you're going to be more Aave. And that's a liquidity pool, Aave versus Ethereum. And that's what impermanent loss is. But Bancor solves impermanent loss. You don't have that. And they do this using an inflationary protocol that is ultimately going to be deflationary by them adding a burn component that's pushing through the DAO either now or sooner than later. And these boys are generating significant yield. This will load in a second. Angelo, it's definitely hitting 40 today. That's crazy. Markets continue until they stop and reverse. And the question then becomes, how far do they reverse to? So these are the pools. Hundreds of percent on Bancor. So I have Bancor in the DAI BNT pool earning 260%. I have Aave a little bit of Aave. I don't have a large Aave position because I expect it to significantly outperform the world as it becomes a global central component of financial infrastructure in the coming decade. So you don't need much. I don't need to take a big bet. But I'm earning 55% on my Aave. They're in protected liquidity pools, and they're just growing. Growing non-stop because it compounds. It compounds. Um, anyway, anything could happen, but it would be bought quick. Got to have your buy order in. Well, that's buying low, selling high. I have a lot of friends that still have that mentality. I could tell you I did that during DeFi summer. Buy low, sell high, reallocate gains towards your value storage asset, which was Bitcoin, which produced basically the position I'm in with regard to my current portfolio. Um, you know, the funny thing is, maybe it's because of the lucrative gains this year that has allowed me, maybe it's a luxury that I changed my portfolio strategy completely away from asymmetric returns. I have no interest in an asset going significantly higher, one, and two, they are actually going significantly higher, and three, my focus and interest pretty much predominantly is recurring revenue streams. What I am looking for is yield. I'm looking for money that's coming in on a daily basis. Curve is giving me $19.72 a day at this point, which, is that $600 a month? Nothing to sneeze at. But here's the kicker, and this is why it's an exciting bet. And there's risk, obviously, in all bets, but they're doing $241 million a day in volume. If they did $2.4 billion a day in volume, all of a sudden I'm making 70 grand a year. $2.4 billion a day in volume, if you put this into a global perspective, that's basically zero. The global, I think, fiat trades $6 trillion a day. So dare we say 24 billion dollars a day, $240 billion a day, making 700 grand a year or $7 million a year, depending on how far this thing goes. And that's a speculative bet. But my eye is on recurring revenue streams. I have that VE curve lock. I have the Bancor that I showed you. Um, BlockFi Celsius, obviously. Um, Surprisingly, a 1 inch is incredibly lucrative. This thing is spitting out governance rewards. This is to the tune of about 100% a year at this point. And if we take a look at the 1 inch price, this thing has experienced at least dollar denominated trend reversal significantly. That is a significant trend reversal. You notice the higher high. Red line was a previous peak. We had a higher high, and notice that we back tested on the daily. So if we go to the 4 hour, you'll see that more clearly. So you do have that rip to the upside, a bounce back down, and then a continuation, and with the higher high at this point. So this is conducive with that kind of narrative if you're looking for an entry. Clearly risk on. It's a highly liquid asset. Highly liquid assets are going to be, or potentially going to be, extremely volatile. And that's the thing. That's why Bitcoin's doing what it's doing. It's a liquid asset, but what's happening is a supply side disruption. So it's becoming substantially less liquid. It's deliquidating. If you want it, you have to pay more for it because there's less of it that's available. And that's the way the price appreciation works. And that's why you get the traditional, um, ladder effect, higher lows, higher highs. And that's what basically causes that. Um, what am I missing? Any news from Aave, George? Aave, Cresco FinCEN? Aave? I mean, Cresco FinCEN, aside from the asset, which is speculative position in all regards, I think they're on the verge of something massive. They deal only with like family offices and big money, and they're offering their depositors 3% yield in insured accounts, which are pretty much bank accounts, because you're going to get that yield either by people paying the protocol interest or by the insurance, and that's a nationally a regulated company, what they built, Robert Charette. Cresco FinCen's working with Aave. Man, listen, if Cresco FinCen could all of a sudden offer double-digit yield to multi-hundred-billion-dollar family offices, I mean, this whole market is going to just erupt to the upside. I mean, look, Cresco FinCen's just exploding more or less. That's pretty cool. I only have 100 of them, highly speculative position, relatively low liquidity on Uniswap. So I don't expect this to just go straight up. But if a hundred turns in, and this goes to $1,000 an asset, clearly in like a long time. But if it goes to $100 an asset and I got 10 grand, yay, that's nice. So you don't need large positions, and if you take an excessive risk, you're doing yourself a disservice. Look, I bought 100 at like $3. It's $300. If $300 turns into 10 grand, that's a win. You don't need to plow 50% of your value into assets to strike it rich or win or make a fortune. No, what you need is small wins, risk adverse wins, risk considerate wins. So you protect your gains, you maximize your upside, and minimize your downside. Would you mind Crypto Chick love learning about yield and maximizing? No, that's what we do. That's what I do. I know you guys might want to hear. Some people might want to hear more about asymmetric return potential. So an asset that goes 100x, the next big pump, and I don't care about that. I'm sorry. So I like yield. I like recurring revenue streams. I want my assets to grow to a value that I'm able to generate. Let's say $150,000 a year in recurring revenue stream. Guess what? Then I have my value, and I'm never having to touch it, and it's going to keep growing. So 150 turns into 160, turns into 170, and before you know it, I'm making $250,000 a year just because I have assets that people want access to, and I'm able to lend that to them, and they're going to pay me because they're going to use those assets to make money. And ladies and gentlemen, that's what I said on Twitter earlier today. That is what monetary velocity is. And guess what? In the real world, the banking system, the global financial system, that monetary velocity has collapsed. Do I need to show you? I need to show you monetary velocity. Check out this chart, boys and girls. Monetary velocity of M2 stock. Basically, this is the global financial system. It has collapsed, and this is the recovery. This is the whopping recovery. That little rip, that's what we've had all year. You guys see this? You guys see, and do you want to see the most important thing? Look at this. This is Q4 2019. This did not. What has collapsed? The economy collapsing has absolutely nothing to do with what occurred this year in the pandemic. This started in September of 2019 and was observed by the United States Federal Reserve repo operations. The financial system failed. The U.S. financial system failed in September of 2019, much like an event of 2008. It was a failure of the banking system, and it was not this year. It was last year. But then you had a pandemic which totally exploded in the face of the Fed and the repo operations, which just resumed the implosion and accelerated it. This is an absolute collapse. This doesn't exist in history. There's nothing in history to say that this is, not only is it not normal, it's straight down, but there's no time period in history where it ever was this number. Crazy. Would you mind explaining what the governance pools versus liquidity pools are? Yeah, governance. So there's a couple of different governance. Some governance is inflationary emissions, like Keeper DAO is, for instance, it's not really governance yet because the protocol has yet to be released. But was it Captain Weber who has a rook position? Ooh, ooh, look at that rook, baby. What is that? 250% in like a week? Wow, it was like $70 last week. Yeah, So this is a dilutive emissions. So they are distributing the rook. So this is basically their ICO phase in some regards. So the emissions of rook complete on February 1st, and then this is where the speculation comes in. The team is expected to release upgrades to their D app. This D app, what we're looking at right now, is an application to give a DAO so rook holders can vote about what to do with this, what to do with the treasury, how much money they've accumulated by the keepers doing their Ethereum mempool arbitrage and fancy keeper tactics. They've generated $10.6 million. So where does that go? How does that get used? And then they're going to decentralize it. This is a very reputable team. They're related to Ren, and speculatively, there's extremely high expectations for the platform, a platform that is basically a money printer. Could you imagine if they scale this? And there's new games and new services and new tools and utilities for keepers to use to generate more returns. This is an absolute money machine. Clearly speculative in all regards. You don't need to apply a large percentage of your portfolio to make bets. If 1% of your portfolio turns into 10%, you changed your life. If 10 of those happen, you've really changed your life. That's the name of the game. Is it time to take some keeper DAO profits off the table? No. From a macro perspective, I have no interest in that. I don't think from the price. To me, it has nothing to do with the price. Clearly, if the story changed, so this is the whole point. Trends continue until they stop and reverse. They stop and reverse. That's one piece of confluence suggesting the story is changing. But this platform has yet to launch. The DAO has yet to emerge. The treasury has yet to been voted on where to distribute to. We don't even know where the story is heading with this. This is pre-Cambrian. This could be an explosion. So I have no interest in taking money off the table in this regard, um, in that regard. Um, but it's also a very small percentage of my portfolio. So you folks need to keep that in mind with regard to position sizing and the balance of your portfolio. You don't need, oh, please, everyone, you don't need a large percentage of your portfolio applied to highly risk on assets. Risk off, boys and girls. When Ren kicks in, you can stream all day. I have Ren up. Oh, I did have Ren up. So Ren reminds me actually of the Digibyte chart. So Ren Digibyte, Ren BTC. So Ren is in a very large falling wedge, as you can see. It doesn't look like it's going to break out and start appreciating in Bitcoin denomination anytime soon. Falling wedge is a bullish trend formation, so that's likely to occur at some point. You're going to have trend reversal. But this is the whole point. Folks that are riding this all the way down, there's no indication this trend reversal. So what you look for is a break to the upside, a retest, and then a higher high. And then you have more confluence than less, suggesting trend reversal is kicking in, and that you could expect continued appreciation. And so I mean, it's a different story for me with regard to Ren because I don't care about the Ren price at all. I care about dark nodes and volume on the network. DGB, BTC, very similar falling wedge, very large falling wedge trend formation. Digibyte does not have recurring revenue stream, so what you need to expect is for this price to keep going down. There is no indication whatsoever that Digibyte is going to appreciate in price anytime soon. And this is something you need to consider with regard to position sizing. If you are overexposed to an asset that is more likely than less likely to appreciate in value, you need to consider your position size accordingly. Now, I do consider Digibyte something that needs to be part of my portfolio just because of what it is and what it means from a hopeful standpoint of a better world standpoint. But if you have 100% Digibyte, you're getting creamed. You're losing all your money. You're losing it all, guys. So there's no indication whatsoever that this is going to start appreciating in Bitcoin denomination anytime soon. That's my whole point, boys and girls. Protect your money. You work too damn hard for it. I thought crypto was difficult to understand, this yield business. Props to you, Noah. Thank you for all you do. Brady, my man. I hope it helps. There's just a never. I don't know everything, and I know far from everything, but I know enough that I've made the decisions I've made for myself, my family, and my portfolio, and that's what I share with you. My experiences that I've had with playing around with these various DeFi products and services. I mean, just all you have to do is go to Aave.com. Uh, is it .com or finance? Aave.com. You go to yearn.finance. You go to oasis.app/borrow or just oasis.app. You go to bancor.network, go to curve.fi, go here, go to keeperdao.com, go to 1inch.exchange, and just go there and just look at the website. And that's how it all starts. Uniswap.exchange will take redirects to app.uniswap.org. So, but just go to these sites and look at them and try and play with these things. As of right now, gas prices are absolutely astronomical, and considering the price appreciation of Ethereum, uh, if you're playing around with small money, you are priced out. I am priced out. I cannot do a $10,000 transaction. I will be spending $150 on the transaction fees, and it's not just really of interest. It's going to be $30 to unlock the transaction. Look, I got creamed on my LDO. I bought like $1,000 worth of LDO like yesterday. It's already down to $631. I can't liquidate it. I can't. Check this out. Watch. Just to unlock the token to make the trade is $28. It's going to be a $140 transaction to make the trade. It's just not. You get stuck. But excuse me. What's important is make a dollar trade. So watch. One. If you unlock one, I might actually still be priced out because it's a contract interaction. And that this will actually be interesting. If this is $30, you're done. You can't even play around with the platform. It's too expensive to operate on the network for a small player. But at least go on the websites, click the buttons, look at the stuff, click the DAO. I mean, this is cool stuff, man. You're looking at the formation of the future financial system. This has never existed in history. What you're looking at here is real time governance of a decentralized protocol that actually changes automatically. I am able to vote to increase my revenue that's the governance emissions. I'm able to vote right here, right now. And if I wanted to really vote, you buy more and then you vote, and then your vote counts more. This is real. This has never happened before in history. This is crazy. Crazy. Um, Platforms, protocols, BlockFi, Celsius, Compound, Curve, Aave, RenVM. Do you see a meaningful influx by legacy players into these platforms in terms of usage and in terms of investing? So right now, the value in these platforms is trivial. It's negligible. It's basically zero when you're talking about the amount of money that's going on globally. What's pertinent is exactly what I'm showing you. There's yield. These systems work. There's transaction fees. There's leverage. There's monetary velocity. There's a capacity to lend. There's a capacity to borrow. There's options. There's synthetics. There's derivatives. This is just, that is the story. And that's the story, today's topic. Markets tell a story. The story is, and you combine that with the global financial system, crumbling, and the story is this just keeps going. That's what the story is. This price action is astounding. Um, if the Bitcoin narrative changed, it's not going to be by a mean regression down to 35,000. That's not a change in the Bitcoin narrative. This is an acceleration of the narrative, especially if it holds support and prints a new higher high. The best way to describe what's going on is probably watching Raoul Pal and the way he's talked recently. You're witnessing S-curve adoption. and it's 11 years into this experiment of blockchain-based financial systems. But it's reached critical mass. Willie Wu talked about that the other day, one of the most successful traders in the entire crypto space. They talked about S-curve adoption. Follow Willie Wu. Let's see if if he wrote that recently. I mean, look, he makes models. He's a quant and a trader, and he's one of the most important figures in the crypto space. And based on his analysis, it was 100K. And based on Plan B, it's 100K to 288K. And then you got the global macro financial backdrop that says the system is fucked and Bitcoin's going to 500,000 or 1,000,000. And at that point, do you really care if it does a 50%? If it goes to Bitcoin goes to $1,000,000, do you really care if it falls 50% to a $500,000? You're probably, if Bitcoin from here goes to $500,000 and you have a one or two or three maybe, and you're lucky enough to buy them at $3,000 in March, you're not going to be working or needing to work. You're going to be managing your finances as a job. Uh, can you can you see some DeFi platforms ever using the Ethereum smart contract to freeze or seize assets? It's not possible to freeze or seize assets. It doesn't work like that, my friend. I remember hearing that some Ethereum wallets holding USDC. Yeah, but that's because that was the USDC contract. Not you. Okay, your DeFi platform. So that's the problem with the centralization. That's not a problem with the DeFi smart contracts. Uniswap is effectively decentralized. There is no modifying those contracts once they're deployed, to my understanding. So Uniswap is a great place to find liquidity or provide liquidity to generate yield. Um, let's go back here for a second. And here's the kicker. Uniswap V1 is still online. There's no taking this stuff down. There's no takesy backsies for the DeFi movement or the crypto space. This is here. You can't take it down. Government can't do anything. No one can do anything about it. It is here. And V2, let's look at liquidity. Sort by liquidity. Let's sort by volume. No, this is not the best example. I would have to sort better, but there is some serious yield on Uniswap. For F die is probably like 40-50% a year. Just here, look. Oh, that's right. Uh, this is F USDT. Ethereum USDT is currently an incentivized liquidity pool as they go through their 1-inch governance asset emissions phase. So check it out. If you go over to the pools, you can see 1-inch Ethereum is generating 20% per year. Clearly a spot rate. That's the interest rate at this point, which is dependent obviously on the liquidity currently in the pool. If it goes up, interest goes down, and vice versa. But you deposit in here, and you take those liquidity pool tokens, and you go over to farming, and 1-inch Tether is generating 422% per year. Now, that's not sustainable. It's not going to occur forever, but the emissions are in 1-inch tokens. And these 1-inch tokens have the potential to appreciate in price asymmetrically. And the 1-inch tokens can be applied to the governance protocol, which is constantly generating yield. And that yield from the governance protocol is from transaction fees. The yield from the governance protocol is sustainable and will go up. And that's the interesting thing about VE curve, as I said. This yield is sustainable. This comes from transaction fees. This isn't from inflation. This isn't from any magic. There's $241 million worth of transactions on this platform per year. From those transactions, I am generating right now spot rate. This goes up and down depending on the daily volume, generating $7,000 a year. If this goes to $2.4 billion a year or a day, bam, 70 grand a year. Now we're talking, boys and girls. You're an inspiration. Thank you, Brady. Appreciate it. YouTube must have YouTube must have you shadow banned. You should have way more subscribers. And I appreciate that, White Wolf. I wish. I mean, 30 concurrent right now makes me happy. I started out this small with like 5 people. This was small. So I appreciate all you guys. I really do. I hope this helps, and that's the whole point of doing this. This is the stuff that I've experienced over the last year, practically the last 6 years. Been in this since 2014, and I hope this helps people because you're fucked if you're just saving dollars, and that part breaks my heart because all of these tools and this innovative, disruptive technology has emerged that's real. Look, I just showed you yield that's sustainable. It's actually sustainable. Incredible. Crazy. Permanent loss, real quick. Um, and permanent loss, real quick, is as I said, if you have a liquidity of Ethereum and Aave tokens. If Ethereum rips to the upside in value, that means people are buying Ethereum. You're going to have less Ethereum in your liquidity pool. So you're going to have more Aave tokens. So that means if you withdraw your liquidity pool, you're going to have less Ethereum and more Aave, which means you missed out on the Ethereum appreciation. That's impermanent loss. And Bancor, so that's when you say, oh, Bancor liquidity pools avoid impermanent loss. You don't experience that with Bancor. So look in the Bancor, Bancor.network. Anyway, 12:09 p.m. January 7th. Thank you everyone for joining me. I hope it helps. Smack those thumbs up buttons. Tell everyone to subscribe. And like always, I wish you all a wonderful day, and I will see you tomorrow. Peace.